to the Web3 Prof Podcast.
Good morning and good afternoon, everyone. I'm here with Andrew Johns, who is a senior investment advisor at Canaccord Genuity, also the co-founder of Honey Badger and the host of Coastal Front Podcast. Thanks for being with me.
Glad to be here. Thanks for having me, Jared.
Okay, so Andrew, we got a lot to talk about today, but let's start off with who are you? So where are you from? You're involved in managing a fair bit of money for Canaccord. Just a small $5 billion, and you're involved in the world of crypto. So let's hear, how does this all come together?
Sure. Well, a little bit of personal background myself. First of all, dad of 3 great kids, married to my wife, Crystal, grew up here on the West Coast, born in Vancouver, grew up in Port Alberni and Vancouver Island. So kind of grew up with small town values, I like to say, but I'm a big city boy.
Big city qualities, right?
Yeah, exactly. So grew up in Port Alberni, playing hockey there, and in the 1970s and 80s, then moved down to Victoria, went to school there in business school, went to UVic, did the semester actually at UBC before it was known as Sauder, and then graduated from there and started working in the financial services business. In the independent company called the Raymond James, which is known as Raymond James today. I was there for 18 years. And then 5 years ago, moved our team over to Canaccord Genuity. So I started off as a traditional financial advisor. I kind of learned about that business through my mom's brother, my uncle, and started off doing just private wealth, what we call private wealth advising. So helping people with their retirement savings, that type of thing. And then during the global financial crisis, like most advisors, our clients were getting crushed in their returns. My personal income dropped by 33%, and I needed to pivot our business to figure out a way to kind of recover, and uncovered this opportunity in what's described as this now called cash management. And it's this very it's a very unsexy business of just like trying to get clients, big companies, organizations. We have universities, school districts, First Nations bands, publicly traded companies, and helping them and getting them better returns on their cash. The Canadian banking industry is controlled largely by 5 big banks, and like most times, there's inefficiencies in a market. And so what we've identified as an opportunity to work on behalf of our clients. I used to often use the layman's terms of we're like a mortgage broker, but for cash. So we have clients that have cash balances of 40 to 70 to a couple $100 million with us on average, and we squeeze the banks. We go out there every day working on behalf of our clients to help get the banks to pay more for their cash deposits.
So are you investing it in the public markets, or are you depositing it with banks for interest?
We're investing we're investing it with a lot of times the same banks, but we're just again using the similar analogy of a mortgage broker. Is we know that maybe this week TD Bank's paying a higher premium on Canadian dollar deposits, and RBC's paying more on US dollar deposits. Those are the 2 currencies we deal with. And then maybe next week or a month from now, it's going to be CIBC and HSBC. And so we're just every day on the phones, constantly negotiating with these banks, and then letting our clients know where the opportunities lie.
Interesting.
And then how we make our money is we take a small spread. We typically take about 10 basis points. Yeah. So it's almost like a Walmart model. It's very low margin business. Yeah. But it's very high volume. So as you mentioned, we're at almost $6 billion today, and we're $5.6 billion in client assets, and we created a new market that never really existed before '08. There's other groups that try and compete against us. We are the market leader for sure in the space. But the total amount of cash in Canada, if you add up all the money sitting with private companies, public companies, hospitals, regional districts, municipalities, the number's massive. It's in the trillions for sure. So, our $5.6 billion is just a small snippet.
Right.
Yeah.
So your business can grow.
Yeah.
There's a lot of room for you.
A lot
out there,
of growth. Yeah.
Okay. So tell me about Honey Badger.
Yeah. So in addition to running this cash management operation, in 2014 or 2015, I went to a Vancouver. It was a Vancouver Board of Trade lunch event, which there was a presenter talking about this thing called Bitcoin, and I'd never heard of Bitcoin before. It was summer of 2015. So I went to this presentation, listened to this guy talk, and I was really interested in this concept of digital currency. Yeah. And it wasn't even a talk about cryptocurrency or all these other things like NFTs, or it was just literally a conversation about Bitcoin.
Right.
And so I left that and I called up this guy and said, look, come to my office. I want us to chat more. I was really interested in your lunch presentation. So he was just a kind of nerdy guy. He ended up becoming my co-founder of Honey Badger.
Wow.
But he was this kind of nerdy, like really, he was a Russian fellow that moved here, went to university in linguistics, but he got really involved in Bitcoin. And again, this is very early on. I mean, Bitcoin was created in 2009, and we were having a conversation in 2015.
Yeah.
It's only been 6 years old. At that time, Bitcoin was only like $300,
Right.
and I went and bought one Bitcoin from
Right.
him, and I was like, okay, this is kind of cool.
Yeah.
And so it took about 6 or 7 months. I didn't talk to him for a while, and I just kind of let this sort of I just read more about it. And then about 7 months later, I called him back up and I said, hey, Yuri, let's meet again. Let's have another meeting, power meeting, 1 hour. And I want us to lead this meeting, coming up with an idea on how we can do business together.
Right.
And so he came back and we sat down, and he was still doing his thing. He had this one Bitcoin ATM machine. I didn't even know what he was. I just knew he was into Bitcoin.
Right.
And near the end of it, we were exploring, like, should we start up like a Bitcoin conference business, or should we start up an exchange, or should we start selling Bitcoin apparel? And I was just exploring all the different areas, and like I just wasn't connecting with him on like where's an opportunity until like literally 10 minutes before the meeting was going to end. I'm like, well, do you have any other ideas? And he's, well, I got this Bitcoin machine, because he was mostly doing in person, right? Like he was doing like
for cash.
But he's like, well, I've got this Bitcoin machine on Robson Street at Steamrollers. And
it's Steamrollers.
Yeah, it's Steamrollers in Robson. And I'm like, well, what do you mean Bitcoin machine? He's like, well, it's basically like an ATM. And you just, like, customers come and they put cash in and they buy Bitcoin and they get their Bitcoin on their wallet.
Right.
I'm like, that's what I want to do. Let's do that. That's an easy way for me to get in.
Yeah.
And so fast forward about a month later, we had our first Bitcoin machine delivered to my garage at my house. And it was myself and Yuri and my partner, my right-hand man, Mike. And the three of us were in this garage, and we were kind of like, all right, how does this thing work, Yuri?
Plug it in. And
yeah. And
so did he manufacture this, or did he just buy an ATM and he programmed it?
No. There was already a bit of a business having been built in this arena of Bitcoin ATMs,
Yeah.
and so we partnered up with a company out of Texas, and we ordered our first Bitcoin machine from them.
Okay.
And so I think we had the fifth machine installed in Vancouver, and today Vancouver proper alone has like 200 machines. It's a very saturated market now.
Yeah.
But today, fast forward from that early days, our first machine we installed was in Kitsilano in summer of 2016, and our second one was installed in Victoria in early 2017, and then we're like, okay, this thing makes money, let's roll it out. And fast forward, here we are today. We just finished 2022. We have 203. Bitcoin ATM machines across Canada. We have I think we have the most northern location in Whitehorse. They're from coast to coast, and we did, I think, like top line sales last year of like $32 million.
Wow.
Yeah.
Incredible.
Yeah.
And so, are you paying the restaurant or corner store like a rental fee?
Yeah, exactly. So
space?
we have two kind of what we call hosts or retail locations. So we're mostly in shopping malls, grocery stores.
Right.
We kind of tend to be, we want to position ourselves as more of a premium brand. So we tend to stay in kind of nicer quality retail locations. So we have a couple of big corporate arrangements with one of Canada's largest shopping mall operators, and also one of Canada's largest pharmacies. And so those are a slightly different arrangement. Then we also have some sort of one-offs. Like we'll have an independent convenience store, an independent gas station, where we pay them rent.
Yeah.
And then it also brings traffic into their location.
Sure.
Yeah.
And then you take a spread of, you charge a commission on the Bitcoin sale or something like that.
Yeah. So the interesting thing is that while we've seen this massive meltdown in the whole entire digital currency, cryptocurrency space, we're recording this right now in January 9th of 2023, our business continues to boom. We are in a business of basically like a foreign exchange type operation. People buy and people sell, and we take a spread between the two. Yeah. But we offer really great service. We have like our customer service team's phenomenal, and it's all non-custodial. So I think that's what's partly been driving our business too, is that like a lot of the fear of all these, running these exchanges and like the whole meltdown with started with Celsius in the fall, and then this most recent one with FTX. And so people are starting to realize the old saying, which is not your not your
keys, not your coins.
Not your keys, not your coins, or not your wallet. Yeah,
They're
not
like,
your keys,
okay,
not your coins.
They meant that when they said that on that podcast I listened to or whatever it was.
Yeah, exactly. So
what? So when I go to a Bitcoin ATM, do I have to KYC? Do I have to give my identity in some way?
Yeah. So thankfully, our industry was obligated to start to operate like a money services business, an MSB. And in fact, Honey Badger was at the forefront of, advocating and connecting with the Ministry of Finance and basically lobbying them to like make this business legitimate by forcing all operators, including ourselves, to a higher standard. Having spent my entire working career in financial services in a regulated industry with like nationally with IROC and locally with like the Ontario Securities Commissioner here in BC with the BCSC. The standards in which you operate under a name like Canaccord or Raymond James is very, very high. Like we have very high AML and KYC requirements. And then you look at the cryptocurrency space and you're like, this is like a totally Wild West. Like for most of the years that we started operating, like nobody had to do anything. Even if we saw suspicious transactions, we couldn't report them because FinTrack is such a terribly run organization. I mean, I don't know what's worse, like CRA or FinTrack. They're like, we can get into that. So I'm glad they've got it, but here's what I've learned. And it's interesting because I'm pretty familiar with the whole transition of the cannabis space, and I see the same thing happening. So if you look at the legal cannabis operators in Canada today, and particularly here in British Columbia, it's really hard for them to make a profit because they have all these obligations to adhere to as a legal operator with candidly not as good a product. I don't use cannabis, but from what I've been told, the quality of the product isn't as good and the cost is higher and the cost of operations are higher. Yet you have illegal cannabis operators who literally provide delivery home service. And there's like zero incentive by law enforcement to crack down on these guys anymore because there's just like no convictions. Right. So I've often said in the last couple of years, my observation is that one of the reasons I think you see a lot of like, kind of a little bit off the rabbit hole here, but like when you see the reasons you see gang activity happening, starting to perk up here in Metro Vancouver, is I think it's partly being driven by the cannabis business. It's still a very profitable business if you actually know that industry. Yeah. I'm seeing the same thing happening in crypto now. So what's unfortunate, what I didn't anticipate, is that while Honey Badger and some of the other top operators in this country are really sticking hard to maintaining good KYC and AML practices and going to the minimum bar or higher that the regulators are requiring us to, there's still lots of operators that aren't doing that at all. And they're running free. They're able to like basically take people's cash, take their wire transfers, take whatever they want to take in payment, move the money around. I mean, I think there's a ton of money laundering activity, and it's actually a great way for criminals to move capital around, way simpler than hard dollars. Right. And unfortunately, we have like FinTrack has rules, but they have no teeth, zero teeth. It's like absolutely drives me nuts. It's like having a police force that doesn't arrest anybody. Yeah, it's like the laws are there, but we don't have a police force to enforce it. Yeah, wow. So what happens is you have it doesn't take long for the criminals to go, well, the rules are there, but no one's enforcing, so I'll just carry on with my business. Right.
Okay. That's fascinating. So you get into so you have this Bitcoin business. What is your opinion of Bitcoin unrelated to your Bitcoin business? I mean, sure, you want Bitcoin to do well because it benefits you, but do you believe in Bitcoin? Are you a maximalist? What's your position there?
Yeah, I mean, I'm not as hardcore as, say, some of my staff that work for me. I mean, they're really hardcore. Some of them think like the whole world's going to pivot to like Bitcoin or cryptocurrency. First of all, I guess let's separate there's Bitcoin and then there's everything else. Right. And I like to use the analogy. It's kind of like if you take the periodic table and you look at the different types of elements there are. There's gold and there's silver and there's copper and bronze, right? And I kind of see all these what often is termed as shit coins out there. Is they're like everything else that no one cares about in that periodic table, and like majority of the market cares about gold, and then secondly silver, right? And so I kind of look at Bitcoin as like the equivalent of gold, and Ethereum is the equivalent of silver, and everything else I don't care about.
Okay.
Like when we rolled in here and some dude's got a Dogecoin Ferrari.
McLaren.
McLaren.
There's a Dogecoin McLaren parked out front of this building right now, and it's here every day.
I know. So,
That's so ironic.
it's just so
It's a
funny.
perfect place for a crypto podcast, really.
Yeah, you got to interview that guy for sure. I was like, is that yours?
Yeah, right. Can you imagine?
It's a hell of a podcast.
Yeah. Yeah, this podcast is going well. I got a McLaren up front.
Yeah. Deckled in Dogecoin.
So do you personally hold Bitcoin? Is this something
Of course
that
I do.
you?
Yeah,
Okay.
100%. Yeah.
And so where do you see Bitcoin, or sorry, let me ask you this. Like, why does Bitcoin matter? Why do we care about Bitcoin?
Well, so there's two. So we could talk blockchain, but I think you're more interested in talking about cryptocurrency.
You can talk about blockchain.
Yeah,
if you want.
we could, but let me so obviously, okay, just to simplify. I don't know how advanced your listeners are, but I'm going to dumb this down because I'm a kind of layman's guy. I like to keep things really simple. So, first of all, blockchain is just a digital ledger system that has it's still in its very early days, but it's the foundation of which, similar to what the internet was built on, right? Today, everything we do on our phones and social media and surfing the web is all based around access to the internet. And so blockchain technology has all sorts of great business cases that you guys, your students probably read about. And I'm a big fan of blockchain. Within the world of blockchain is a world of what's called cryptocurrency, where their intent is meant to simulate what fiat currency does. And so you've got cryptocurrency that's all based around blockchain technology. And then within that cryptocurrency world, you have different types of cryptocurrency. The biggest one, the behemoth, being Bitcoin. And then the next biggest being Ethereum. And then after that, they kind of trickle down. And so Bitcoin is based on blockchain technology. But if we're going to talk about cryptocurrency, again, I go back to I don't really care to talk about, joke about Dogecoin, but all those other cryptocurrencies, to me, people are just, it's a game of a house of cards. They're gonna all melt down. They probably melted down already. I wouldn't touch them. They're just a bunch of gambling, coins, right? They have no value. They have no meaning. Ethereum has some good business cases behind it because they can create smart contracts built into Ethereum. But the one thing I love about Bitcoin is its simplicity. It's hard coded. The distribution of ownership is so broad now that it'll never ever change. People talk about Bitcoin being hacked. Bitcoin will never be hacked because it's a coding system that can't be changed. Right. And what I love about Bitcoin is it has a lot of the very similar aspects to gold, the good aspects, but it doesn't have really any of the negative aspects. Right. So if you want to contrast the two, and I don't see Bitcoin replacing fiat currency. I don't see it replacing gold or stocks or real estate. It's a new asset class that we never had before. And I think that when you look at, fine art, antiques, and real estate, and gold, and other commodities, and equities, and bonds, this is just another pool of asset class that is going to have real value. It's going to continue to have real value over time. Bitcoin has printed almost all the coins it'll ever print. So it's close to 19 million at this point out of 21. It'll have again, and I think 2 more years from now.
And I think it's going to take another 100 years before the last Bitcoin is mined. Yeah. It's a fascinating system, right?
It is. And it can't be changed. It's not going to be changed. To get change, you have to have 51% consensus, and the distribution of ownership is so broad now, you'll never get that. Right. So what makes Bitcoin, the negative or the downside of Bitcoin is it can't be changed. And so there's certain challenges that the industry sees, like Bitcoin mining, which is, even the term itself is a bit goofy. I like to refer to it as it's not mining, it's transaction processing, right? Yeah. Most of the mining is going to disappear in the next few years, and it's going to be almost solely, miners are used just to process transactions. Right. And so when you look at the world of Bitcoin, it lacks, and it's like gold in the sense that it doesn't have inflation built, it's inflation. What's the right word? It's inflation protected. It doesn't, you can't inflate the number of Bitcoin out there. Right. You can with Ethereum. That's one of the big criticisms of Ethereum, right? Vitalik can just go snap a finger and all of a sudden double the number of Ethereum coins out there. Right. Whereas Bitcoin can't. And then you've got the transferability of it. That's almost as easy as digital currency or digital, movement of sending money like a wire. It's actually even easier.
Yeah. Or like sending an email. It's that simple.
It's that simple. It's got lot of volatility. That's one of the downsides. I mean, you can see that. But actually, if you track the annual volatility of Bitcoin since inception, every year the volatility drops.
Right.
So, like, I look at Bitcoin and I spend most of my time talking about it because I think like all these other cryptocurrencies are just not worth talking about when it's going to be I think it'll be that like 10 years from now, we're doing another podcast. I think we'd still be talking about Bitcoin as being the dominant cryptocurrency in the planet.
Yeah. So, yeah, and I mean, it's like the whole blockchain was founded by Satoshi, like he invented, or they, or whoever Satoshi is that created a blockchain, and it's a powerful mechanism. It's a powerful model for businesses to be built on. Let's talk more about kind of the macro and your thoughts on from an economics perspective. So, I mean, at this time in the beginning of 2023, it seems like we're going to be entering into a recession, which is a big scary word, and most people don't even know what that means. But what are your thoughts here, kind of broadly speaking, from a macro perspective as to where we are, and how does that affect the price of Bitcoin, for example?
Sure. Well, so let me maybe talk about broadly the global economy, maybe a little bit even about the Canadian economy. So, I mean, I think that right now we are like literally a hut on stilts on the edge of the ocean with a huge tsunami heading our way, and like everybody's like, "Hey, this is the sun's out. It's nice. Let's have a good party."
You're so optimistic.
I'm an optimistic guy, generally speaking, but I'm telling you, man, I don't know if it's because I'm going to turn 50 in just over a year from now, but I'm like, things are they're heading in a bad direction. I think this all goes back. You had a global financial crisis that was like really like a true meltdown of the global financial system that was it was when you look back and you watch a movie like The Big Short, like you can see why it happened,
right,
and it makes a lot of sense.
Right.
And there was a fairly reasonable and good recovery that happened. Some fairly smart decisions from a policy perspective by government, and industry got back, and everybody got back on their feet. And then COVID hit, and I'm going to sound like an anti-masker, anti-vaxxer kind of person right now, but like I think that the government and health authorities took over in 2020 and 2021 and 2022 and just like made so many bad decisions. I guess it would be 2020 and 2021 in that 2-year period. And like literally my analogy would be like, I'm having a party, I have no credit. I mean, I'm having a party, I have no cash, but I got lots of credit.
Right.
And I'm going to have this raging party, and everybody's going to have a lot of fun. And so let's have everybody come to my place, and we're going to pull out the drinks, and we're going to get the music going, and it's just like, and I'm going to spend all this money. And now where we're at right now in 2023 is like the party is over. It ended like 6-7 months ago, but the bill's here, right? And it's like I paid for the whole thing on my credit card. And now the credit card company's calling me, and I'm avoiding their phone calls. But the bill is here, and it has to be paid by somebody. The latest jobs data just came out last week, and amazing. Like Canada, saw the unemployment rate go from 5.1 to 5, and we've been floating between like I think the lowest was like in the summer like 4.6, and the highest was like a year ago was like 6.2. But we've been like at these like crazy low unemployment levels, and that's the only thing that's holding us up right now.
Yeah.
Like if you look at inflation and you look at how it's been dropping, why? Not food. Food hasn't been going down.
Right.
Cost of living hasn't been going down. Mortgage rates are going up. Rents are going up. The only thing that's brought inflation down is a 25 to 30% drop in oil prices.
Right.
Do you think oil and gas prices are going to drop by another 25 to 30%? No way. And if they go up, we got a big problem. So we have an economy that's just like getting by right now off of the fact that there's tons of employment because nobody's laying people off en masse yet. There's starting to see cracks in the system. Amazon just announced that
some of the tech companies are laying people off. I even read though that we're not really feeling it in Canada though. Like we're not getting hit that hard here at this point.
Not yet. I mean, we have a fairly strong commodity industry. Building activity still going on for the most part because there's still housing needs. But look, the reality is most working Canadians and most people working around the planet that are in the middle class are not getting ahead.
Right.
They're just getting by.
Right.
And so here's my prediction. I think 2023 is the year of reckoning. I think this is where the buck stops in this year. And I think that what's going to happen is largely, especially in Canada, maybe a little bit less so in the States because they're a little bit better. They're not as indebted there's a metric I track, which is the total amount of household debt divided by GDP. Other way around, sorry, GDP divided by household debt, and the level of debt the Canadians have today, household debt compared to our GDP, is about 30 to 40% higher than what the Americans were at in 2007, the year before the global financial crisis.
Now that is staggering.
Yeah, it's bad. I mean, everybody you talk to in Canada has a ton of debt.
I read that we have in the G8 the highest debt after Japan in Canada per capita.
Yeah,
it's outrageous.
I'm sure it's true. I mean, look, you got a prime minister who's a trust fund kid, doesn't understand how money works. He builds out a cabinet full of people who also don't know how money works. I mean, Chrystia Freeland has no clue whatsoever. And these people for the last 2 years have been like telling everybody that it's just all going to be okay. The budget will balance itself.
Such
right?
a famous saying,
yeah.
Right?
And like so the Canadian government has like they blew the doors off with all their spending, insane amounts of spending, far beyond what they should have spent. In all supposedly in an effort to keep us all safe. Right. And so now we're starting to see, well, like the number of like the deaths that actually occurred from COVID are really, there's still a lot of the data is coming out, right? These Twitter files and stuff, and starting to see that like, okay, maybe it wasn't as bad. It was, but the response that we saw from the government was so absolutely over the top, and we didn't have the money in the first place. So the amount of deficits that were generated in the last 2 years are just absolutely insane. It was already like crazy before COVID even hit. That all has to get paid for. And now the cost is here. The thing is, taxes are going to go up. They're already going up by inflation, right? Like we all are going to pay more. We already pay more in taxes because the cost of living is going higher. And so, consumption tax like GST and PST, you're just paying more. Canadians right now are getting by because of the fact that they still have employment. They're able to make their mortgage payments. They're not saving even more. They're saving less. If they were saving before, a lot of them are not even saving at this point. They're just getting by. Now, that's it. To me, it's an analogy of like the game you'd play at like a school fair called Cakewalk. You have the chair, and there's the music playing, and then they pull a chair away, and so like there's 10 people but only 9 chairs, and like everybody thinks that, oh, I'm good because like there's 9 chairs and there's only and there's 10 of us, I'll get a chair for sure, right? and then they pull another chair away, and then they pull another chair away, and as long as the music's playing and we're all walking, everybody's a winner, right? And then what ends up happening is eventually all the chairs are taken away. There's 1 chair left and there's 2 people, right?
It's like when you hear the saying, you only know who's swimming naked when the tide goes out.
Exactly.
And the tide's going out, and we're going to see soon.
Exactly. Yeah. So I think 2023, you're going to see unemployment start to kick in. And we don't even need to see ourselves go to 10 or 20% unemployment. Forget that. We're at 5%. If we go to 7 and people start losing their jobs, it's one thing to take your entire paycheck after you get taxed to the hill and use that money to buy your more expensive groceries, eat your more expensive restaurants, and pay your higher mortgage fees and just get by. But when you lose your job and your income goes from whatever it is that sucks to 0, game over, right? So here's an interesting thought. If you look at the big 5 Canadian banks, okay, typically in a rising rate environment, bank stocks are one of the best places to put your money because margins on banks widen and they make more money when interest rates go up. Okay. It's a universal rule. It's been around for 100 years. If you take a look at a name like CIBC, stock's down 25% this last 12 months. Take a look at Bank of Nova Scotia. It's down like 22% in the last 12 months. The only 2 that are even getting close to being like break even is RBC and TD Bank because they're so huge. A lot of people don't realize the big 5 banks. If you take from top to bottom, it goes Royal Bank, TD Bank, Bank of Nova Scotia, Bank of Montreal, CIBC, and the National Bank is number 6. If you took National Bank, CIBC, and Bank of Montreal and you merge them all together, they'd still be smaller than Royal or TD.
Oh, wow.
So a lot of people don't realize, they think the big 5 banks are the same.
So it's really the big 2.
It's the big 2. Yeah, those are the big 2. Well, all their share prices have been beaten up. So you ask yourself, okay, rising rate environment, bank stocks always do well. Why have their share prices gone down so much? Default risk.
What's default risk?
Default risk is the risk that people don't pay their debts, right? The people that default on their mortgages. Yeah. And Canadians have, and here's something else to think about. There's a ton of Canadians that are sitting in variable rate mortgages that are just getting killed right now. That's about half the market. The other half are in fixed rate mortgages that are at like 1.5%, 2.5%. those are all coming up for maturity in the next 6 months, year, 18 months, and 2 years. When those people have to renew their mortgages, like it's going to be a total shell shock.
Because their payments are going to triple, quadruple. I mean, who knows where it'll be? Who knows where it'll be at that time? Even.
Yeah. Even if the rates stay where they are right now, Jarrett, they're going to
afford that.
Very few.
Like nobody can afford to pay four times their mortgage.
We are in for a major real estate correction here. Like I think we could have a complete meltdown in the real estate sector, and I think that's why you're seeing the market. I mean, it's crazy that a Bank of Nova Scotia, third largest bank in the world, the third largest bank in Canada, is down like 22% when interest rates are going up. The reason is because interest rates aren't going up gradually. They've gone up sharply, right? And this is just a total shock that the system hasn't absorbed yet. And it's going to unravel here very, very quickly. I think in the next 6 months, we're going to see it. So you start to see that, and then you start to see small businesses start to shut down because they can't hire people. Bigger companies like Amazon announcing massive layoffs. And then that starts to sort of downward spiral. And the only way this thing gets fixed anyways, then you got to go to the central bank. The central bank screwed up, right? They printed way too much money in 2020 and 2021. And they're the reason that's driven the inflation, right? Like, the famous economist Milton Friedman, right? Like he's been the guy who said he's not around anymore, but he's a great, if you want to watch, there's a great video on YouTube that was him filmed at the Chicago Board of Trade back in like 1982. And if you close your eyes and you listen to this presentation he does in 1982, you think it's 2023.
Right.
Like it's amazing. Right, he's talking about inflation and government policy. He says, inflation starts and ends in only one spot, and that's Washington D.C. And for us, it's in
Ottawa.
In Ottawa with the Bank of Canada. So the only way the Bank of Canada and all these central banks can like really fight inflation is keep raising interest rates and unwinding their balance sheet.
So what do you think about? So one thing that Milton Friedman said, and I think it's even in this same talk, is that inflation is the silent tax on society.
It is 100%.
Right? We don't. When the government announces a 2% tax increase, they lose votes. But when they print money and they inflate the economy, it's like the frog in the boiling water, right?
Yeah.
We don't necessarily fault the government for this. We're like, oh, it's the global economy or something.
100%. I mean, here's a good example. Wage inflation is always permanent, never temporary, and it always lags things like cost of food and fuel. Okay, so now what you're seeing in 2023 is it's already started in 2022 where they called it the Great Resignation. I called it the Great Rotation. It's not like people were actually resigning. I mean, it's not like people just said, I'm not going to work anymore. There's a lot, like we got 65% participation in employment globally in Canada. So, which is pretty normal because there's children and there's retirees and the rest is all of us are working, especially with all these higher cost of living. You got to work. So I call it the Great Rotation. And what people are doing is they're basically leaving one job to go. And I see this as an employer myself. I have almost 40 people working for me, and we're constantly getting people that are leaving, or even people who are interviewing with us, and they're literally using a job offer from us to go back to their employer just to get a better leverage. Yeah, just to get a better. They don't have to move, right? Yeah. We've had to give tons of huge pay increases over the last year. As we pay those people more, in order for them to just be able to buy the same stuff they were buying before, but for higher cost. But the thing is, they go into higher tax brackets.
Right. So
now they're paying actually more tax because it's a marginal tax system, right? Like you go higher. So now they're jumping to higher tax brackets. So net, they're actually getting further behind.
Right.
Because their goods have gone up. And maybe let's just assume that their cost of income, their income has matched it on a pre-tax basis. But an after-tax basis, if their cost of food and their cost of fuel and their cost of living is going here, but an after-tax basis because the tax system doesn't change, because the tax system is not inflation protected, right? It's not like the government's adjusting the highest marginal tax brackets every year. They're saying, oh, if you make 130 grand, that's the new bracket you're in. And so now all of a sudden, 2 years from now, if everybody's making $130,000, so now that's one. Then the second one is on your cost of your goods, right? So if you go out and you buy yourself, a new phone for $1,000, and but now it's not $1,000, it's $1,200, so $200 more, and you're paying 12% tax on that 12 on that extra $200. It's $24, dollars right? So or $2.40. That's $24, right? So everybody who's buying a new phone this year is paying $24 more in taxes than they did 2 years ago.
Yeah.
And that's the silent tax that Friedman's talking about.
So when we see Andrew Johns run for prime minister, and you are recovering this mess, what do you do?
It's the classic.
Like,
Margaret Thatcher?
Do you tax? Do you cut spending? Like, what do you do?
Yeah. It's the Ronald Reagan, Margaret Thatcher approach. You have got to cut. And there's a lot of people who are not going to like that.
Yeah, nobody's going to like that.
Especially not here in the hippie West Coast, right? Like people want, right?
We want our services, right?
Exactly.
We want all of our stuff
for free, and they don't have to work. So, look, there's only one thing. This goes back to my sort of comment of like the party's over, the bill is here,
right?
And you can't have a global economic pandemic. Sorry, let me rephrase that. You cannot have a global pandemic to the scale that we had with COVID, whether you agree or don't agree with what the government did and how they responded, okay? And government always screws up on everything anyway, so
it's no surprise.
It's no surprise. But you can't have that kind of scale. It comes along once every couple hundred years and not have any economic pain associated with it. And that's the thing that I think people don't get is like, you can't get away with that. You just can't. There has to be serious economic pain. And what we did, or what our government and our central banks did, is they just kicked the can down the road.
Right.
And in fact, they made it worse. By spending all that money and printing it all, they've created this inflation beast that is like cancer. And the more it grows, the harder it is to beat. And so that's why I also believe that I don't think we're not at the end of this rate rising and increasing tightening cycle. Like right now the data is showing us that potentially the Bank of Canada will cut rates in December of this year. It's like a 80% chance of like a quarter point cut. I'm like, no way, man. Rates are going to go higher. The central banks all around the world, they want inflation back at 2%. There's only one way they get there, by raising interest rates and making the cost of borrowing higher.
Where does this 2% number come from? Because you hear this 2% is the target. Is it arbitrary?
Yeah, it's some goofy number that you know what? Here's the thing: who's running the central banks, right? Like I'm 48, you're 40 years old. It's not us, right? It's a bunch of like 60 and 70-year-old dudes, right? Okay. Who they remember when they used to have a mortgage at 15 or 20%,
right?
And so they're so fearful. What's the irony here is they screwed up, but they were like, for the last 20 years, like, we got to keep inflation at 2% because that's a reasonable rising rate of cost of goods and services. So they came up with this number based on what happened in the 70s and 80s. We're like, we never want to go back there.
Right.
And then COVID hits, and then they make all these stupid decisions and spend all this money and print all this money, spending it on the government side and then printing it on the central bank side. Yep. And now they're like, now they're going, oh geez, now we got to fix this. And the only way they fix it is by unwinding that balance sheet by the central banks. And it's not just Bank of Canada. Like the Federal Reserve made the same decisions.
Every central bank did this, right?
All around the world.
Right.
Yeah.
So when we look at the future, I mean, obviously it's looking not great. Are you allowed to give financial advice?
Yeah, for the most part. Okay. I mean, like,
what would you advise people to do? Like
I've said this publicly on my Twitter file, like on my Twitter handle. I'm like, the number one investment in 2023 is debt repayment. And this is also what's going to stop things like Bitcoin prices from going up, equity prices. The only thing that makes prices go up in a high inflationary environment of those asset classes like real estate and not Bitcoin, but like real estate stocks and commodities like gold tend to be good inflation hedges. So they may go up a little bit just to kind of match with inflation because inflation's all based around fiat, right? And if your value of your fiat currency continues to devalue, the problem with Bitcoin is it's just still such a fringe asset class that it's probably not going to benefit greatly from the fact that there is no inflation in Bitcoin. But I would say that the number one advice I would give to anybody right now is if you have debt, which is most people, pay it down. Right. Pay it down fast, pay it down aggressively because it's not going to get any cheaper. People thinking that rates are going to go down. And I mean, you know, I don't know where rates are right now, but I advised a lot of my clients and friends and people I knew to get out of variable rate mortgages and fixed rate mortgages over last 6 months. And I have some people who listened to me and they're really happy they did, and others that didn't. And, they're really hurting right now. So I would say the number one investment you can make is investing in paying down debt.
Right.
I mean, here's some simple math. I'll just follow everything. So the average mortgage right now, 5-year fixed term mortgage, is 6.5%. If you're making $100,000 income, your marginal tax rate's 32%. If I gave you $1,000 and said, here, Jarrett, what do you want to do with this? Well, in order for you to get the same return as taking it to pay down on your mortgage, your 6.5%, you'd have to get a 9.8% return on a guaranteed investment with no risk, which doesn't exist.
Not possible.
Yeah.
Wow. I mean, that's interesting. That kind of information I think is so helpful to people to understand how important it is to pay down debt.
Yeah.
Because you can't get 10% guaranteed, that's for sure.
Yeah.
What can you get guaranteed? 2-3%?
No, it's more now. Like you could buy like a 1-year GIC, get yourself like I think a 4 to 5% return.
Okay, so I want you to ask you this. So we hear about the inflation numbers all the time. I don't know what they're at, 8% or something like that, right?
Yeah.
Do we believe that number? And what is that number made up of? And what is excluded from that number?
Yeah.
Because my sense is that it's much higher than that because a lot of important things aren't included in that basket.
Well, yeah, I would say overall, I'd say in a country like Canada, the United States, it's especially the U.S. one, it's so well documented and founded. Like I'd say it's pretty accurate.
Okay.
I think it's around there.
Yeah.
In the 8 range. What I do find funny though is that like people talk about, like especially politicians, like, well, if you take out the core items of, shelter, food, and heat, then it's not that bad. Except that you need shelter, food, and heat, especially in this country.
Those are literally the most important things we have.
So, look, this inflation problem is going to continue to persist for quite a while. I mean, it's way beyond early on. I mean, this is the problem I see with these politicians and these central bankers. Like the central bankers were lying to us. Like a year ago, they were telling us that inflation's transitory. What the fuck is your definition of transitory? Like 100 years? Right? Like to me, transitory is like a couple months.
Right.
And so them saying that was just totally, they were lying to us.
Right.
Or they were lying to themselves.
Yeah.
And so now they're saying, we're going to get under control. Like you guys don't have anything under control. If there's anything I learned from the global financial crisis, especially seeing big names like Lehman Brothers going insolvent, is that when it's that classic saying, I love that line from Mike Tyson, like everybody's got a plan until they start getting punched in the face, right? And like nobody knows anything. Like nobody actually knows what's happening. I mean, I'm just a guy with an opinion. I might be completely wrong, but my overall take is that this is 2023 is going to be a really bad year for a lot of people. And so like my general advice would be like hunker down, save your money, pay down your debts. If you don't have debt, then my next piece of advice would be like, don't sit on cash. Even though I manage cash for a living, like long term, it's not a good asset class. I mean, if you're making 5% inflation's at 7%, you're having negative 2% real rate of return. Yeah. And if you're managing, if your company or organization has $100 million of cash, that's a material number. Yeah. I think it's why our business is booming so much right now, because clients are really starting to appreciate how important it is to like maximize your cash returns. Yeah. But holding real estate, I think is a good idea. I like gold. I think holding a core commodity like gold is a really good idea, because if we do get a bad economy, I also think global unrest is like, I think this whole thing with Russia is just the beginning. Right. You're going to start to see more global unrest as people, if you take a look, the World Bank publishes once a quarter the highest inflationary environments for food in the world, and they're kind of these rogue nations like Afghanistan and stuff, but they're crazy numbers, right? Like these people living in places like these countries like Afghanistan. What's the other one where they ran out of fuel recently? It's kind of wedged in between India and China. I forget it's that smaller country, Bangladesh.
Bangladesh, yeah.
And I'm like, these countries are going to have like, there's going to be civil war, or there's going to. So I think that, I mean, I'm sounding like there's going to be an apocalyptic event.
You're a bit of a doomsday kind of guy here, aren't you?
A little bit, yeah. Like I just think it's going to be bad.
So do you think that people in these countries can, look to an asset like Bitcoin as as a safe haven, or is it too high of a risk? Is it too volatile?
Oh, for countries like that, if you have money, I do a lot of business in Argentina. Now,
why is that?
It's an arbitrage. It's a currency arbitrage trade that we do for clients, and we kind of do it quietly through Canaccord. It's all legit and legal, but it's a huge booming business for us, and we're like one of the best in the world at it. So we get a lot of business with companies that are doing business in Argentina.
Wow.
Now, what's interesting about Argentina is you have like a ridiculous central bank that makes our central banks look like they're actually doing their job right. These guys just print money like crazy.
Yeah.
Then you've got a government where the IMF won't even take the government's inflation numbers and publish them anymore because they're so bogus.
Oh, really?
Oh, yeah. And then you've got like Christina Kirchner, the vice president, just got locked up in jail like in the same week that they won the World Cup. They threw her in jail for 6 years because of like embezzling money back when she was president. I mean, this is just like one of these classic Latin American emerging market basket case countries, right? And so like they say their inflation rate's like 50%, but the real view is that it's about 100%.
Wow.
Okay. So if you're living in Argentina, you're one of two people. You're either really poor or you're really wealthy. Mm-hmm. If you're really wealthy, and this goes to, I have two reasons why I think we're going to see Bitcoin will be around forever. I don't care what people say, the price, it'll go down to like zero. It's not going to zero. And you hear guys like, Charlie Munger and Warren Buffett say, they have no idea what they're talking. They're just too old, right? They don't get it. Here's two reasons why you will always see Bitcoin around. Number one is because as long as you have countries like Argentina that create strict currency controls, South Africa, India, and they have strict currency controls, Bitcoin's a way to harbor your money and get it out of that country,
right?
And skirt that system. And people will do that. If I'm living in a country where my government is corrupt and they're trying to take my money or stop me from being able to put it into a hard asset, and I can't get it out through normal means, I'll use cryptocurrency.
Sure.
And my number one use of that will be Bitcoin.
Yeah.
So that would be the number one reason. And I would say the second reason is because it's been proven now over the last, what has it been, like 2019 or 2009 till 2022. So, or I guess 2023 just had his birthday. Bitcoin just had his birthday a couple days ago.
Yeah, that's right.
That it is a real asset class that people believe in and people trust it. And it's not owned by a government. There's no CEO of Bitcoin. It's consensus based, like legitimate asset class.
Yeah.
And so I think the second reason is there's just so much buy-in around the world now globally. Like the cool thing about Bitcoin is like, unlike any other asset in the world, except for maybe the hard US dollar, like a physical $100 bill or a gold coin, it's the only other asset in the world that people recognize and can appreciate what it was worth in their own local currency.
Right.
But the big difference between those are two physical assets that I can't move around. I can pull out my wallet right now on my phone, and I can send you $100 of Bitcoin, and then you can take that Bitcoin, you can send it to somebody in Africa in an instant.
Yeah.
And that's really, really powerful.
Yeah, and nobody knows. I know this. Woman who, she was raised in Venezuela, and then her family moved to escape the country, moved to Syria, and each time they had to give up their assets. They couldn't take them with. They had to get out. And if they had Bitcoin, or if they had known of Bitcoin, they could have cashed into Bitcoin and saved a lot of turmoil for themselves to rebuild country after country as they kind of fled continual chaos, right?
Well, going from Venezuela to Syria, that's a bad call in the first place.
Work in the oil business. I guess that's what you do. I don't know. And they're like, hey, Syria's looking pretty good. Okay, that's great. I think this has been really helpful to get your perspective on kind of a global outlook. I really like kind of your thoughts on the actions of the government and the central bank and how this is going to impact us in the future. So this has been a super helpful conversation. I really appreciate you being with me, Andy.
Yeah. Hey, thanks for having me on. And for those listeners who are interested, I also have a podcast, as you mentioned.
Yes.
It's called Coastal Front, and it's very West Coast centric. So we have three types of guests. We have elected officials, like we've had David Eby on a couple of times, Ken Simmer, our new mayor. So we have politicians, so there's a political aspect to it. We have community leaders. So we've had people on that, like one more recent one. We're actually just going to release an interview with Julian Summers to talk about policy around addiction and homelessness. And then we have business CEOs, so heads of major companies here in the West Coast.
Yeah,
so
that's great.
fun.
Excellent. Thanks. I appreciate that.
Yeah.
Okay. Thanks so much, Andy.
Yeah. Thanks for having me on, Jared.